Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone.
Hey, our email address on the show is thebiz@brokersalliance.com, and you can call me 1-800-290-7226, my extension 147 in our Hunt group, for any products on quotes or product servicing items, anything that is insurance, long-term care, life insurance, disability, annuities, our group pension plans. Feel free to just give us a call at our toll-free number. And of course, remember, your host, Steve Savant. I'm a lot of things, but one of them is I'm not a tax advisor or a legal advisor. So if you hear any ideas today that are going to be cool, and hopefully they will be, always check with your CPA or attorney, or if you're with a broker-dealer, always talk to your compliance officer before going forward with any plan with your client. Of course, I have with me today Susan Carlson, head of our long-term care department here at BrokersAlliance.com. Welcome, Susan, to the show.
Thank you.
Susan, I'm talking about today, our first segment on long-term care. We're talking about, could be a Civil War show today, I gotta say. This could be a yin and yang,
Okay.
a tale of two cities.
Alrighty.
We sell long-term care contracts, right? We do. But we also we share too. We sell linked benefits with on annuity and life insurance platforms. There's a lot of yin and yang. Why should I buy long-term care standalone products? It's a use it or lose it proposition versus linked benefits.
Right.
What now? It's not that we're opposed to either one, but give us the good and the bad. What's good about it? When do I know when to use this? When do I need to go this way?
You know, the linked benefits really are starting to make a push in the market, and I suspect we're going to start seeing a lot more, because what the insurance companies are finding is that not everybody is going to buy traditional long-term care insurance, so they need a fallback. However, one thing to keep in mind, though, is the linked benefit product is going to be the most expensive long-term care insurance product you can buy.
Now I'm sorry, but that surprises me.
Yes.
Why would you say that?
Because you've got two products. So not only am I paying for the long-term care insurance, but I'm also either paying for the life insurance or the annuities, okay? And it really kind of comes down to the prospect. The way that I've always addressed this is I start with traditional long-term care insurance because it's the best leverage for your dollar. It's got the strongest benefits. It's got the care coordination, and it's designed to cover long-term care insurance. It's not a afterthought per se. But we come across the same objections. Well, what happens if I never use it? I don't want to pay this forever. So my linked benefit pitch, if you will, is a pivot point for somebody who is not open to buying traditional long-term care insurance.
Although you were saying, I remember in one of your teaching episodes, which by the way just has to be out at Agent Navigator, where they post Susan teaching, so if she's teaching, she must know what she's talking about. And it's also on our site, but you were talking about how when you're looking at linked benefits versus real contracts, you were trying to say that the actual linked or the actual contracts actually were bigger benefits than the actual contracts on linked.
It depends with which company. I know there's one particular company who just took their long-term care policy and put it in there. But for the other carriers that have been in the business a little bit longer on the linked benefits, they're not. It's not that they're bad. They're just not as rich as a long-term care.
Don't they have return of premium on standard standalone?
They do.
Is that worth looking at?
Well, it was interesting because in the past, if I was to look at a linked benefit, because most of them are a single pay, which is another roadblock. You know, does my client have those types of assets? But looking at a single pay and then looking at a single pay long-term care policy with a return of premium, in the past, hands down, it was always less expensive to buy a standalone single pay UL, universal life product, and a single pay long-term care policy. Separate. But with the changing in the pricing, that's not always the case any longer. So really need to kind of take a look at what the motives are for the individual, and they might not need life insurance. They might not want another annuity. We have to remember what the base policy is. But for someone that has existing assets, has an existing life insurance policy, we might want to 1035 that into a linked benefit product and then sell a small standalone long-term care policy to make up the gap. So they really can work together.
Well, let's just go down that road now, because I thought we were not going to have a little civil war here. But it sounds like we are a gentler and kinder and team player here at Brokers Alliance. So I don't have my linked guys coming in here saying Susan's slanting it on long-term care. So if I wanted to, I would go ahead. Let's say, for example, an annuity that has an LTC link. I buy that.
Sure.
And then we look at what happens, because the benefits aren't forever.
Right.
Right. So it's going to be a terminal. So we know it's going to, and sometimes maybe we can figure out how to homogenize and help them integrate. So I could buy an annuity with an LTC, and then whatever is the shortfall, whatever doesn't pick up, could I buy an LTC
Absolutely.
product? Now, how far out on an LTC product can I do to begin my elimination? Because a lot of these annuities go, 5 years, 6 years out on linked annuities.
Well, a lot of times when we see them going side by side, the longest elimination is usually a year. But what we tell clients is to use the traditional long-term care policy first, because remember, with the annuities and the life, they're using their money first. Versus with a traditional long-term care, they're on the company's dime. So we say, use that policy first. If you still need long-term care and it expires, then roll into your linked product, because you're using your money first on that. So we like to see, now that's not always the case, but we like to see the traditional be primary.
Do any of the carriers give any kind of benefit? Like, I know, let's say they sell an annuity linked and a standalone. Are there carriers that do both?
Yes.
And do they give any... Do they ever work together in tandem at all? Has anybody thought that?
They work more on the systematic. No, not to my knowledge. Now, I know one company, if you buy an immediate annuity, they will systematically fund their long-term care policy behind the scenes, and their interpretation of the Pension Protection Act is that those distributions should not be taxed as income. So on their 1099, they report zero. Now, that's that particular company's.
Yeah, and I'm thinking that particular company sounds like Genworth to me. And Genworth is what I think it's the only company that's jettisoning at a 1099 that has zero on it. Now, they're still you're still getting it, though. You're still getting a 1099.
Correct.
It just doesn't have anything. And I think that's just their paperwork trail for the IRS, just so they say, hey, this is actually going to an LTC product.
Right.
So I don't know of any other carrier. You're right. That's an anomaly with Genworth, and if that's an issue for you, and you want a paper trail just to cover off the 2006 Pension Protection Act, that's an excellent way to go.
You bet.
And maybe others will follow. Now, when I'm looking at companies that have it, I'm always thinking, well, if I'm a carrier that has both a standalone LTC and a product-linked benefit, whether it's life or annuity, I'm trying to figure out which one am I making more money on, as far as the carrier goes, because it's kind of a, what should I have sold this one instead of that one? But you were saying that once you go to two different products on one platform, it's going to probably be more expensive ultimately than if you would have just bought a straight-up LTC product.
Correct. But you don't have the guarantee of, one, it's paid up, because more than likely you're doing a 1035, or the what if I never use it. So the company, Genworth looks at it as looking to the prospect. What does the client want? Lead with traditional long-term care insurance. If you can't get past that, then look at doing some reallocation and perhaps doing one of their hybrids. Or if they have a lazy asset per se, then moving that into a hybrid product.
What do you mean by lazy asset?
Assets, they're just-in-case monies. They're CDs money. I have $100,000 here to cover my long-term care expenses. All right, well, let's take $25,000 of that, and let me leverage that even more. So if you need long-term care, you would have 6 times that amount, in benefits. Or if you just never used it, you would have 2 times that for life insurance. So they look at the prospect, but I also look at the producer. Sell what you know. If you're comfortable with annuities, then start with the annuity hybrids. If you're comfortable with life insurance, start with that. Get comfortable with the terminology, so that way you can make the steps into selling traditional long-term care insurance.
For our agents and producers who are excellent at LTC sales, I've noticed some of them have become aficionados in the 3 platforms so they can pivot either way. They have the life annuity, the life linked LTC, the annuity linked LTC, and the LTC standalone product.
Right.
So they come in with all 3 ready to go one way or the other. And I think if you're going to play in this game, because a lot of us are pretty good about one of those 2 linked technologies. Either I'm using the annuity or I'm using the life. Now I can look at, say, okay, I got both of them. I'm going to add this 3rd one to my plate, and then kind of say, here's what I've done. I've done my due diligence on carriers. Now I've done my due diligence on the product tactic that I'm going to use to indemnify you.
And I think another area to keep in mind is underwriting. If you have a life hybrid product, not only are you being underwritten for mortality, but morbidity. And if I have a 70-some-odd client, I've got some pretty high cost of insurance expenses.
So the COIs on the life side of that equation may be too prohibitive to put in joint on a single contract with the LTC morbidity chart.
And that's maybe when I would pivot to an annuity instead, or just to the traditional long-term care. So by having all 3 in your portfolio, it's no longer an us against them the way that it used to be. It's how can we work together and what's best for the client to make sure that they get something.
Well, if you want to do that, because we sell linked benefits on life and annuity right now. We do that. Now we're adding LTC to the plate. We're really being aggressive to put them all on a par, level footing, so that we can really do the due diligence and the due care that we want to do with our clients to make sure we're doing the right product, strategy, and so forth. And if you want to call Susan, just call her at 1-800-290-7226, her extension 140, or just go ahead and write her on her email, susan.carlson@brokersalliance.com. All the data collection, everything else, we'll send you all that information. Susan will make the call. She'll walk you through all the quarterbacking of this whole thing. She's our liaison. I love it. So you don't have to worry about that. And listen, in our second segment, we're going to come up and pick up this whole idea of this rule called the Class Act of 213. We're going to get into that whole thing. That's a whole other scene. You can write me at thebiz@brokersalliance.com. Call me 1-800-290-7226, extension 147, or hop out to our website at www.brokersalliance.com. You're listening to the Business Insurance Zone, the talk show that features insurance in your practice. We'll be right back after this commercial break.
Steve Savant here. For years I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended periods